Good morning, everyone. Hope we are doing good. Um, today we've had a bit, well, this week we've had a bit of a crazy week, so I'm just going to cover it. We've created some kind of uh, all-time high for the year so far in a lot of pairs and all-time lows, but then we've rebounded right back. So I'm just going to go through some things and see what potential trades there might be out there today. I've only taken two trades this week, sorry. Oh, well, it is this month actually. One winner and one loss. I marked these up yesterday. I know I've said this a few times. I did a full video yesterday and recorded it, and it just didn't record the sound again, so it's just a bit annoying. So what I did yesterday is I marked up this zone, which was a 100 pip zone, um, as a guide to see where we might go next. I'm at 132, 131. Now, as you can see, it tapped 132 and then started going down and ended up being bearish. The reason I marked that up was just because when I did the actual video, it was around this time, and we just took all this out and come up to it. Then last night, I looked to mark a zone for a short at 131.05. It's lucky I didn't enter really, because I would have got swept, but the move did happen. Because what I was looking to do was, when I was going to enter was here at 3 o'clock for a 10 pip move, and I would have got taken out by that, and then it would have done it. So I'm glad I didn't, but the reason for that was because of this kind of support we'd had. I saw the dollar starting to react from this area here, which I marked out, which was 101, and then we went up. So that's why timing is so important. So what we're going to look at today is the potential new price points where we're going to move. So I'm going to remove these and we're going to go pretty much from the start again to see where we could end up. Now, the areas that are jumping out to me at the minute as potential reversal points are 130.500 because of this reactions here. This is an hourly chart, so I'm going to mark that up. And then the next point where it can react from is again 100 pips down, which is here, 1295. I'm just going to do zones again today because, and then what I would advise doing is when it gets after the open of US, look and see where we are, and then, like, for example, if I was to go in now on the 5 minute, I'd look in this zone here and think, right, where are my next reaction points? Well, look, there's one here potentially where we've had a reaction and pushed through and pushed up. That's the kind of thing that you'd be looking for to enter. It really can go in any direction at the minute. As you see yesterday, we flew all the way up here and then we tanked all the way down again. So we're not trading in any single direction right now. Again, this is a zone I marked out yesterday. And this is what happened. So I'm just going to remove these drawings. So the bit that's standing out to me again is 110.5, and then the potential bottom again 195. This is the zone which I think we'll be trading in today. Mark these up. There we go. Next, AUD. Interesting days. So we've actually come down pretty low, like lower than we were before when I did the last video. We're coming down to here, and as you can see, we're starting to get this reaction on the 4 hour. So that's 62. So that's where I'm going to put the bottom as, and then the next bit after that, I'd probably put, so do this. So that's 62 dead. And today, as I've said, I'm just going to mark up the zones again, and 62 for, this is a zone I think we might trade in if we continue to get a bit of a push up, or what alternatively could happen, as we're at the bottom of this range now, we may not even see any of that and just keep going down to here. But for now we'll just mark this up, and then if we do come back to price after 1 o'clock and then we start to see it below this blue line, then we can just mark up the next bottom, and that's just how we do the zone. Very simple. NZD, same again. I'll move this here, and then the next one I'd probably say is, well, it's a bit of a tighter zone to be fair. 52 for 57.2 and 56.8. Still, to be fair, it's still a 40 pip zone. I do find, like, when doing zones like of predictions to trading for the US session, I feel like a 40 pip is kind of the sweet spot, because it can very easily move 40 pips. But if you put in, like, and I know I'm kind of contradicting myself with this, but this is just to find the point. But if you've kind of got the points already made here, then that's alright. If I was to do it the other way, I would put it here, look. Can you see? But the reason I'm not doing that on this one is because this has just been complete boom. So I'm looking for the next potential point here. If I was just to plonk it in the middle, there's no reactions really anywhere. I mean, you could kind of argue here maybe, but apart from that, there isn't. So that's the reason why. So this is our zone, 57.2. I think I've marked that, haven't I? Yeah. And then 56.8. Yeah. Next, gold. So it's annoying because I marked these out, so frustrating. So yesterday, this is what I marked out as the zone for a short and for a potential buy. Both of those would have happened. However, the entry models wasn't there. As you can see here, this was 6 a.m. We kind of hit after, and then I put the bottom because of this. We swept it and then just fired through. So if you wanted to be a bit risky and put a limit in there, it would have done it. However, that's now we trade. But as you can see, like I always say, key levels are so important. So this is where we are now on a 1 hour candle. So the zone which I'd be looking at now is 3110 as the next potential high. The reason being, if you can see all of this here, and then we've got a reaction here now as well. And then the bottom, I would say here. Now, what I'm going to do with gold is I'm going to put 3 zones in, because if we do sweep this, we're going to clearly be going up, and then the next level of TPs is probably going to be around this 3140 area. However, I don't know if it was in the last video or in the video earlier on in the week where I said I feel like we're going to get at some point, we're going to get a really, really big push down on gold, like, because the way it's been moving and the way the dollar's been going and the economy, I think it might be overbought. So that's the reason why I'm thinking that. And it will go back up, but look how long it took us to get to 3,000, maybe like 6 months we were talking about it, and then it's just flown through it and just kept going. So I think 3,000 should be the kind of the top of this market for a while. So I think that's where we could potentially target from these ones, any of these areas here. US, CHF, this is a zone I marked out yesterday. On this one I was completely wrong, it just swept through. So let's mark this out. So if we zoom out a bit further, we'll be able to see where potentially we could go. So here I would probably say 85, because we've got this consolidation here, and this is looking where it's heading. And then I'll just tap the zone in here of 86, and then we can go back to it later on today to see where we actually end up. So I've got an 86 as the next high, and the next reactional low I would say here, 85. And then as you can see, if you look to the left, there is this bottom which is 84. Now I will mark that. If it pushes here, then this is going to be the next kind of zone to kind of look at and wait. But most important thing about trading a lot of the time is not trading. Now that sounds stupid, but it really is, because you need to have your confidence there that when you're putting in a trade, you can look back and think, if you lose your trade, you can look back and think, right, I did everything I could have done then, and the market I was just wrong. Instead of trying to guess the market, second guess it, you know, looking for points, and oh, it might reverse here. No, you kind of got to wait for those to happen, and then you add it together. But there's a fine line of being too many steps ahead. Like, you don't want to be too many second guessing the market too many times, because that's when you can overcomplicate it. You only want to be one or two steps ahead and then just ride it. That's it, simple as that. Right. Again, this is what I marked up yesterday. Um, just zoom into it a little bit more. We got this reaction here, which I put as a midpoint. So we did get that, and would have got the short from London. I set this limit at 9 o'clock on this candle, so 10 o'clock and then 11 we went down. What I'm going to do is I'm going to remove this, and then now look, this is why it's important to do bigger zones, because now this zone that I had yesterday is now valid again. So we've got 41.5 and 42. This is our zone now, and that's a 50 pip zone, so just a bit more than the sweet spot of 40. And here we are with this one. This is what I marked up yesterday. It was actually a lot. Actually, no, I didn't. I lie. I wouldn't have done that much. I know that. What I think has happened here is I put three zones, and I deleted it yesterday and lost it up. So the next point here is 147. So we've got 146, 147, 148. Very simple. We're just going to see what happens over the next couple of hours with this. 147. See where I are with this one. 146. That's correct. Got this one. 48. Brilliant. So this is what I did yesterday. There's a bottom and a top. It's quite a big zone. I think we're going to keep going, I'll be honest. So I think one or two is now going to be the bottom. You've got to understand as well, these markets are going to be massively manipulated at the moment. People, companies, governments are manipulating the markets. So this is why you're seeing all these price movements. It's not retail traders that are doing this. It's governments and huge corporations that are making this happen, and they'll be doing it for a reason. Obviously, we'll never know, but what we've got to do is find out and use our analysis in a way to basically just get in on the action. We're not trying to get the full moves. We're just trying to get on the back of it and just take it for a ride and then jump off at the next stop. You know, not take the full route. No, that's kind of a daft analogy, but that's how you got to look at it. You know, if a journey's starting here and it's finishing here, and it's, you know, it's looking like it's going in that direction, we want to get in just a bit after and get off just before. That's what we're doing. We don't want to get on at the start and get on at the beginning. You know, what if it breaks down and we've got to come back? You know, you've got to think of things like that. Use that analogy, you know. Don't want to take the full risk of a long journey. You just want to get on and get off. Boom, done. Profit made. Turn your laptop, turn your computer off, turn your phone off. Wait till the next day. So there we go with this. But yeah, thanks a lot for watching the video. If you've got any questions or comments, drop them down and I will answer them. Thank you very much.